Good afternoon, everybody. Welcome to your Monday edition of the TraderMerlin Show. Lots to talk about today in our markets, some choppiness, and yes, as Skilled Stocksman says, maybe even a shooting star on the S&P 500. I did build more of a short position today, about 20 puts on the Qs and 10 puts on the SPY. We'll see what follow-through is tomorrow, but I'll talk more about that as we run through today's show. Let me start off with the topic du jour, which, you guys have heard me. Every now and again, I'll do a show talking about scams and just nasty stuff that goes on in the industry. And personally, I think that one of the most corrupt, I would say it's probably the third most corrupt organization, whether it's a profession or entity, the third most corrupt on the face of the planet is trading and investing, financial markets, anything to do with finance. Number one, I would say, is government, and a very close second, in my opinion. I'm probably going to offend a lot of people here. I believe in many, depending on which one, I would say religion as well can have some pretty nasty sides to it when you look at one side versus the other. So I'm going to focus on the third one, which is trading and investing world, which it's a love-hate relationship for me. I love it because I am a fan of the markets. I love studying the markets. I think that it's an intricate game that I just love to play that's never the same. However, I go into it every single day thinking, and I apologize if it sounds so condescending, I think every single person and entity involved in financial markets is lying to me, cheating from me, trying to steal my money, and trying to take what I've worked so hard for. I feel like if I approach it that way, then I'm not surprised by anything. And the recent events have been going on, certainly with FTX and Alameda Research and even Terra Luna and UST stablecoin. Those were all, Macaulay Culkin kind of scream moments where people were shocked at how stunning the declines in valuation were. When you look behind the scenes, it was just a bunch of corrupt people just trying to steal money. And ultimately, it came back to bite them. Now, what we're seeing right now is something also very interesting, and I thought it would be worth mentioning. You guys may have seen this recently. Twitter, you can now buy and verify your check marks. So it used to be you had to have over a certain amount of people. You had to send in documentation that proved that I, in fact, am Merlin Rothfeld. Well, now somebody can create an account. You could probably do it today. Create a Merlin Rothfeld account, because I don't have at Merlin Rothfeld. I have at TraderMerlin. But you could do at Merlin Rothfeld. You could sign that up as a verified account by paying $8 and now issue tweets, and people will think it's me. This, to me, opens up a whole new can of worms, which is why I thought we'd talk about trust nobody in trading. And Singy says there's always a Gordon Gekko in every finance realm. There's Gordon Geckos everywhere. And, on one hand, Gordon Gekko was just kind of a jerk trying to make money. I think that there's some people that are maliciously trying to hurt people in financial markets. It just blows my mind at how prevalent it is on a regular basis. So the reason I bring this up is over the past week, now that Twitter is rolling this out and you can now buy checkmark verification. And by the way, let's go out here and just look at Twitter real quick. Just so you guys know, I'm not verified. I have no plans to be verified. I'm not going to pay to be verified or anything like that. But I'll go to, I think I can go here, my account, or click on this one here. I don't even know how to use this damn thing. Yeah, I'm not verified. I've got no sticker over here. I don't have a little blue check mark, nor do I really care. I think everybody here knows that very well. I am never, ever going to solicit you for money. I will never ask you for anything money-wise. If you see something like that, it's not me. But people are mimicking even my profile here with all my pictures and everything, trying to steal other people's money. Now, here are two that came through recently. You get this one was from Lockheed Martin. We will begin halting all weapons sales to Saudi Arabia, Israel, and the United States until further investigations into their record of humanitarian right abuses. So this tweet went out on Friday, I believe. There was two of them that really were big ones recently, but this is one of them. And what do you guys think that did to the price of Lockheed Martin's stock? The interesting thing there is if you just take a second and look at the tweet, you realize it's not Lockheed Martin. Now, they put right there on the top of the page, Lockheed Martin with the little blue check mark right here. So like, wow, they're verified. So people started to freak out, and all of a sudden, Lockheed Martin took a big dump. But if you look at the it's at Lockheed Martini. That little I on there, and that's what a lot of these imitators are doing, is putting, just an extra letter on. I mean, there was so many fake Merlin or Trader Merlins with like a double I or something. So that cost them a lot. Here is the chart. Was this today? Yeah, this is Friday's trading session. They were down 5.5% on Friday, and let's look at LMT right now, down a little bit more. But if you look at total valuation, this could be hundreds of millions of dollars worth of market cap erased for what? For literally Nothing. The other one here, I think I had it already, was Eli Lilly, right? So you saw this one, which would be fantastic. If you see, it says, from Eli Lilly and Company, one of the bigger pharmaceutical companies out there, and it says, we are excited to announce that insulin is now free. Now, wouldn't that be a great thing? Wouldn't that be a great humanitarian move for the global benefit to just have free insulin for everybody? Of course, that also is a fake tweet. I believe, I forget what Eli Lilly's ticker symbol is, but it's like Eli Pad or something like that. It's not Eli Lilly and Co. But this looks so real that all of a sudden everybody's going, oh crap, this is going to hit Eli Lilly's profits. And look what happened to LLY, right? You went from 369 bucks down to a low of 340. You've lost. I mean, that is a significant decline off of one simple fake tweet. Now, I guess the question for all of us is, what do you do about this? Well, first off, trust but verify. Unfortunately, what I think is going to happen is for all of us in our portfolios, you're going to get hit. No matter what you hold in some way, we're probably going to get hit by this. Now, it used to be you had scammers, right, that would impersonate me or impersonate Elon Musk or impersonate somebody and try to get you to send them money. This to me is far more dangerous and out of control because if you guys know that my ticker symbol or handle on Twitter and every other social media platform is at TraderMerlin with one I in the end, then you know it's legit. But if it's TraderMerlin1 or TraderMerlin with two R's or whatever it's always been, you kind of need to know that that's fraudulent. It's a scammer saying something wrong. So know your sources. Know the real accounts for these entities, for these companies. Now, that's not going to stop you. Let's say you were holding Eli Lilly because, man, they've got a great pharmaceutical company and they have tons of great drugs and there's great money in drugs. So you're long in your portfolio, Eli Lilly. You're obviously pissed right now because somebody just cost you, 20, 30, 40 bucks per share on your Eli Lilly for no reason whatsoever. This is going to happen regardless, and there's nothing you can do about it. The thing that I've been wondering over the past couple of days, kind of thought about this weekend, is could I use this to my advantage? Because when I look at a price chart like this, you're like, oh, well, if only I was short, right? If I was short Eli Lilly, I would have made a nice chunk of change here on this big sell-off. But in reality, has Eli Lilly changed? I'm still waiting for my free Bitcoin. Sorry, Alan. Ain't coming, buddy. I ain't not giving my Bitcoin away for nothing. But, has it, do you think that Eli Lilly as a company has changed because they had that fake tweet? It almost makes me think like, okay, somebody's doing something deceptive and devious, and of course, they were probably short. Eli Lilly would be my guess, so there's probably a paper trail here somewhere. But if the company itself fundamentally hasn't changed at all and has now suffered let's see exactly what percentage of a drop Eli Lilly had here, just so I can calculate that one out. It's down 8% in 3 days, right? 8% in 3 days. 2 of those days were because of the tweet, so I'm just going from peak to trough there. I can now buy potentially Eli Lilly at a discount. Or even better, I love selling options. And so, could I, on this news, knowing that it's fake because I could look at the account and see that it's news, would I be thinking, okay, maybe I'll be looking to buy this at 330. So I sell those 330 put options that are going to be hugely overpriced because all of a sudden the fear factor is there and people are trying to buy all these puts. Great, I'll sell them to you based off this news that it's fake news. So I think if you see these alerts, let's go back to LMT. If you see these events happen where you're like, okay, I know it's from a fake account because I can look it up. Even though it's a verified account, Lockheed Martin's down 7% in the last 4 trading sessions. So could I go out here and put a line across some demand zone? There's not really any great demand zones on Lockheed Martin, unfortunately. But maybe, I'm interested in this, let's call it 455 mark. Maybe I decide to sell some puts at 455, knowing that Lockheed Martin has not changed, right? They might have a little black eye in the industry because of that snide comment that was made by a bogus account, but there's nothing that we can do about people with verified accounts smacking the market around. Joe, does the S&P have a... That's a good one. No, there is not one for the S&P 500, but, I think when you look at the space, you've got to go out there and look at who are the influencers, who's the big heavy hitters in moving markets. And what's notable is they're going after companies right now. So, you have Eli Lilly, you have Lockheed Martin. My guess is over the coming months, unless Twitter really figures this out, you're going to get a lot more of them. So expect to see some pretty big downside moves here. I'll tell you this, that if I do see one that looks appealing over the next week or two, if they do pop up, I may actually go the opposite direction. And if I see let's say, for example, Coca-Cola makes a Twitter announcement that says they're going to release the recipe for Coca-Cola. Well, everybody knows they'd never do that, but some fools out there would think they actually would do it. Coca-Cola sells off. Let's go back to Coca-Cola's chart here. Let's say Coca-Cola has a sharp dump and drops from $60 down to, let's say, 55. Well, I'll be selling calls on it or selling puts on it down here at 52 or 53. Saying, all right, I'll collect some huge premium on this one, thinking it's most likely going to the backside or back to the upside. And if it doesn't go up, well, I'm still good owning Coca-Cola long, right? Of course, I like to get sure. Oh yeah, and again, that would be probably Alan. That's probably the last big shoe to drop if it's going to drop. But we'll discuss that a little bit later on. Great question. And remind me, Alan, in case I forget, because I get sidetracked with topics. So, I've mentioned trusting no one from the perspective of even education, right? I know some people out there, we will not mention any names today, that have literally documented from the Federal Trade Commission that they trade very little and don't make money, yet they're running a big school and think that they're that amazing, and suckers are buying into it and taking these courses. You have other people who are running newsletters or chat rooms, and they sound like they're your best friend because they're trying to get, oh, look at this stock and look at that stock. When really what they'll do in these chat rooms is they will work together with a very small select group, and they will say, okay, let's say I've got 5. Let's say that you guys are all my controlling group, right? But we all share this information with thousands and thousands and thousands of people. So what you do is we would say on, let's say, Monday night, okay? Let's say, Monday markets are open, and we all come to agreement that Tuesday morning we're going to issue a buy recommendation and just get everybody we know to buy any stock. I don't care what it is. Let's just say, I don't know, Meta, right? So we all are in agreement that on Tuesday morning, our hot pick of the day that we're spreading to every single person we can, we're talking social media and all this stuff, is Meta. What we do on Monday is we're building a position, right? We're all buying Meta. Probably not buying Meta. We're probably buying every call option that we can get our hands on for the end of the week, right? Get that short-term call option, and then we're just going to have this massive change in Delta when this news comes out. So we're all long thousands of shares of either daily or weekly options, call options on that specific security, Meta. And then Tuesday comes along, what happens? All these suckers, all these media channels start to pick up on it too, that, oh man, Meta's rallying. And it's because our small group of 56 people here collectively colluded to say, buy Meta tomorrow. But we already bought it the day before. So when that news comes out and we start spreading our newsletters to all of these people out there, all the dumb money, all the stupid people who have no idea what they're doing in trading and just looking for a newsletter, they buy it and all of a sudden things shoot up. We unload our shares, unload our options, and call it a happy day. We're all smiling. And us 56 are the ones that made money. Now, if you're lucky, it gets picked up by some media channel or on some scanner or filter as a gainer on the day, and it goes even higher. Bottom line is, trust no one. I mean, Jim Cramer is one of my favorite ones to pick on. He may be a very bright individual, but it seems like he's always wrong. And I don't know whether the institutions are just literally going the opposite side of his trades just to make him look bad, or if he's really that bad of a shot caller when it comes to picking stocks. But, Jim Cramer you shouldn't trust. Me, you should do your own research. The things I talk about here are just my opinions about the markets. Now, quite often, if I'm saying something, I'm backing it up with real money. I'm putting trades on the line on a regular basis. I'll tell you when I'm making those trades. And I think that's a sign of more transparency and honesty, but still you shouldn't trust me. You should be doing your due diligence. If I say, hey, I really like, I mentioned at the top of the program, I bought 20 put options on the NASDAQ 100. I got 10 put options on the S&P. That does not mean you guys need to run out there and start shorting the markets. Do your own due diligence. I may be completely wrong. What I can assure you is I am actually buying puts, right? I'm not lying to you and saying, oh, I'm buying a bunch of puts and I'm going the opposite direction. I'm not doing that. How long will I be in those trades? I'm not sure, but I'll let you know when I get out. Why sell a put instead of buy a call? I'm new with options. Well, it depends on which one we're talking about. If we're talking about like Eli Lilly and the Lockheed Martin charts again, right? So let's go LMT. If I look here and I think that this whole move is fake, right? This move that I have with the blue line here, let's say that I believe that's a fake move. When I say fake move, I mean it really happened. But it's not because the company has changed. It's because some bogus entity had a verified check mark on Twitter and issued a bad announcement about Lockheed Martin. So for all intents and purposes, Lockheed Martin is still good. So I could now get it at a 7% discount. I could buy a call option if I wanted to on that and get more rate of return, right? Faster leverage. But I can also take less risk, buy it a little bit lower, and collect some pretty darn good premium. It's just a matter of how risky you want to be, and do you mind owning that security? You could certainly buy call options, because call options at this point would be cheap. Selling puts, I gain a lot of premium for something that I think is going to bounce right back up. So you could use either one there, Ryan. You could sell a put or buy a call in a situation like that. I like the put selling just because I know I'm earning income, and if I do get exercised on that security that might drift down more, then I'm just going to buy it at a lower price. With the call option, if it keeps drifting down or stays below, right, doesn't rally back up, I'll lose all that premium that I paid. So I'd rather be the guy selling ice cubes than the guy buying ice cubes. Selling puts on companies you'd like to own, invest in. Yep, buy a call if you think you're master of the universe and can time the move. Yeah, and I think that's part of it. Is if I buy a call option, I run the risk that my premium is just going to get thrown away. Right? If it doesn't get up to my strike price, I'm potentially going to lose the premium that I paid for it, unless that's a real sharp move and I close that option earlier. So there's the main reasons why. Merlin, do you think the move in Eli Lilly was due to retail traders or institutions? Big move for just... I think it was a combination of both. I think it... Remember, this is so new. I mean, this stuff it just started happening a couple weeks ago. As soon as Elon Musk made it... Not Elon Musk. Twitter made it available where you could now just spend $8 a month and get a blue check mark next to you. All of a sudden, scammer accounts are popping up left and right. My guess is this will be fixed here in a short period of time. But I do think it's going to take a couple weeks, and we could see more of it. And I kind of hope we do. I really hope that this week we hear about some company getting slaughtered by a fake tweet, and I'll come on the program and be like, okay, guys, I sold some puts here, or as Ryan said, I may buy a call option if the opportunity presents itself, if it's a company I'm interested in owning long term. So there you go. And, this is just from the Twitter side of things. Obviously, when you're buying anything, cars, homes, that you want to have some trust in the salesperson that you're working with. But remember, all salespeople are doing is trying to make themselves a sale so they can get paid commissions on it. And it's a tricky business. A lot of time a salesperson will tell you what you want to hear, even if it may not be the right thing. So when I put trust nobody in trading, it was really kind of circling around this whole issue with Twitter. But I think it just is more of a broader life lesson. I think we all need to be careful on who we listen to and information that's presented to us. The old phrase is, if it's too good to be true, it probably is. Well, I would definitely agree with that one. I think that this is actually a great opportunity to capitalize on moves. I think that we'll probably see more, and I hope I capitalize on a few of them. But undoubtedly, some of us are going to get caught by this. Right? You're looking on your positions down 5, 6, 8%. And you go, what the hell happened? Well, that's because somebody issued tweets, and maybe an institution sold off some shares. And we look at Lockheed Martin's volume. It's not like it was colossally higher, but I'm pretty sure there was some institutional selling which ended up pushing this one down. Its average volume looks to be, right around, a mil, maybe 1.5 mil. And then on the big down day when that tweet came out, they were, doubled their volume at 3 million. Eli Lilly, right? You had a much higher increase in volume. Its average looks to be, maybe 2 million. And that day, which we saw on Friday, you had about 6.6 million. So certainly more activity and people freaking out and unloading there. But we're not done. All right. Trust no one in trading. Trust no tweets. Never send your money out. And, oh, by the way, I got this one the other day. I literally had to call my dad immediately. I was like, okay, don't fall for this one. I don't know how many of you guys use Yahoo accounts, but if you really do digging, you can find addresses and Yahoo accounts and phone numbers and all that stuff. So I got a phone call. This, I think, was last Wednesday. And if I brought it up already, sorry, my memory's just, I'm losing it. I'm getting old. But if you have a Yahoo account, I got a phone call from somebody saying, hi, this is so-and-so with Yahoo Customer Services. We noticed some unusual activity on your email account. And he read off my email account. He said, you're based out of Costa Mesa, so my home city. He says, I got it from this email account. You're in Costa Mesa, but we got activity going on in New York City trying to get into your account to hack your account. And he's like, I'm going to need some steps to help clear this up. So, if you wouldn't mind sharing your screen with me. And I was like, I would really appreciate it if you puckered up your beautiful lips there and kissed my ass. I'm not sending you anything, right? Never share your screen with anybody you don't know. Or download some application. Oh my God. But, think of the detail of this scam. The guy knows he called my personal phone number. He knows my address, where I live. I mean, it was very, very, very convincing. So what do you think I did? Let me just run that by you. If that happens to you, what should you do immediately? You're on the phone with someone who's got your phone number, who's got your address. He says he works for Yahoo or Gmail or whatever site it is that you use to do your email, and that you need to do something with him right now to fix the problem, right? Unfortunately, we are trusting people. So you're going, oh, wow, they must work for Yahoo because they have all this information about me. No, it's readily available online, guys. What would you do? What should your first step do other than just tell the guy to kiss your behind and hang up on him? Well, the first step for me was I hung up the phone. I logged immediately into Yahoo and I just changed all my parameters. My passwords. So change all your passwords. And the other thing that you should be using for certainly anything financial would be to, so you could tell him to call Merlin. Thanks, Rob. Give him my personal phone number. The other thing you should do is use two-factor authentication, which is cumbersome, right? Because you have to have the app on your phone and open up all the time. But to me, that is what you should do right away. Just change your passwords, and then problems should be remedied. Yes, we will definitely talk more about crypto here a little bit later on. All right, so let me get through some of these questions. The trust nobody in trading thing wasn't designed to be clickbait. It's just, I guess, a reminder to all of us that when you have money or even personal information, everybody's trying to get it. They're trying to exploit it, and if they can find some way behind your shield of protection, all of your personal information, account numbers, phone numbers can disappear very, very quickly. In worst case, they get something like your social security number, etc. And by the way, and you guys are real quiet. I got 65 people here. If I was to run through all of the different passwords that you have, all of them, which one do you think is the most important password to you? Do you think it's your bank account information? Do you think it's your maybe login to Social Security Administration? Do you think it's your email? Do you think it's what do you think the most valuable piece of data you have from a password perspective is? And the reason I bring this up is every one of you should be scared out of your wits about somebody getting in to a specific account. And if they do, the amount of information that is there is unbelievable. I got the same thing from a guy that said he was from, John, and everybody, it's going to happen from every source. You're going to get them from Chase. You'll get them from Wells Fargo, whatever your bank is. Yep. Email, guys. Email is hands down. Oh, okay, boss. I would say you're probably right with your computer, but that's not generally as easy as accessible as your email. So everybody, your email is hands down the most difficult or the most important piece. Why? Because you send so much data you may not even be thinking about. Think about this. If you go to buy a house, what do? You're emailing over these documents, which have your social security number, every bank account information, all that stuff is there. Whether you're filling out a loan, don't have to buy a house, but filling out a loan, all that information is there. Way too much info. So you guys should make sure that your email password is extremely difficult. Don't make it cat123 fluffy bunny 17. Make it 20 characters long, man. Make it so hard for someone to crack, because if they get in, you could be in a world of damage, and you may not even know it, right? These things will get sold on the dark web, and all of a sudden, information's it's bad. Anyway, I won't embellish the point. We're going on. Yep, I agree. Everybody got it. So let's go to the list of questions. I want to make sure I can catch up with these, and then we'll move back into some crypto discussion. Eric, you asked this one. He says, question, I'm primarily a day trader trying to go into swing. So when I use regular trading hours over the extended trading hours, I see cleaner areas to trade from. What do you prefer for a day trader style? Because really, the overnight stuff has no volume, so it gets discounted or has lesser odds to trade from. Do you agree? Yes, I do agree. So if you're a day trader and somebody who's looking from the short-term perspective in trading, regular trading hours are really what you want to focus on, right? Because that's where the other market participants are forced to be there, right? During regular market hours, there's an obligation by market makers and other entities to make market. So you have so much more liquidity. Now, if you're looking at the extended trading hours, I wouldn't discount them altogether. I know that there's some traders we've had in the program that say, the Globex sessions for futures are trash. You shouldn't look at it. Look, if you're looking at a pre-market or aftermarket level on something like Microsoft, Cisco, Google, I don't really care. Those don't mean squat to me. But if I'm looking at Globex futures and I see a level that where price came down to it and just screamed away, even though it's low liquidity, it's still going to be something I want to put on my radar. So let me see if I can come up with an example for you. Let's go to NASDAQ futures, right? We're down almost 1% of the NASDAQ. Get the volume out of there. Put this on a, let's say, 15-minute time frame, all right? So let me show. It's kind of hard to see here because you don't get to see the actual extended hours trading, right? You're dealing with 24-hour market, so it doesn't partition it out. So let me go and show you 1 o'clock close. We'll just do the session from a couple days ago. Hold on a second, I'll get there. So this vertical line I'm putting on is the market close, all right? So there's 1 o'clock. And then we'll go to 6:30 in the morning, which was the market open. So there we go. And here is 6:30, should be right. That's when the number came out. Okay, so there we have, in between these two goalposts here, blue, is what the closed period of the market, right? From 1 p.m. till 6:30 in the morning the next day. Now, in there, I don't really see anything that's noteworthy. But if I see something that is a real strong pivot. Now, granted, this level right here on the NASDAQ 100 at 10,000, call it 10,900. You know, that was the origin when that announcement came out for the CPI data. It just screamed to the upside, and lo and behold, we had a monster update. Well, that's a one-off. But if I were to look back at some other time frames, like let's say this guy right here, right? Of course, that looks like it was actually right, and this is during market hours, all right? So let's say you have a zone that forms like this in the after-hour session. What I'll be looking at during the course of the trading day is, let's just assume that our charts look like this right now. This is the real-time market. Markets open up down here. I'm going to still have this line mapped out because for whatever reason, we have this huge move down here. And granted, this was during regular market hours in the picture. I'm just assuming it's, for example, that it's after hours trading. I would keep an eye on that one. And if it did get back up there, I might actually start thinking about selling any long positions I had or potentially opening short positions. But I generally will only look at the indexes. So I'm going to be looking at the NASDAQ, I'm going to be looking at the S&P, and I'll be looking at the Russell in those extended hours trading, the Globex sessions. Other than that, I'm not going to be looking at Amazon in the after hours. I don't really care. Oops. I don't really care. I don't think it makes that much of a difference here to be trading individual equities in the after hours because the liquidity is gone. Here's your extended trading hours, and I'll add volume on the bottom so you can see it. It always looks like the Golden Gate Bridge, right, at the bottom. Huge volume right as it opens, tapers off, spikes at the end, and then dead. And if we zoom in here, I'll do it on a 5 minute to really drive it home. You know, you look at these shaded areas, this blue and gold or whatever color this is, there's almost nothing going on. But if I look at that on the futures market, there is volume there. So to answer your question, Eric, I could care less about an individual security or really even some of the ETFs trading after hours. But I would look at the Globex and futures just for extreme levels where there was a sharp move, and I might be able to use those during the next trading session. And that's my answer to that one. Hopefully that helps you out there, Eric. So the other day, and this is from another Eric. The other day we were talking about hammer formations, which I love, and we'll talk about shooting stars here in a second because we do have a shooting star in our market today, which I will bring up here in just a second. But the question was a good one, and it dealt with trading those. No problem, Eric. Thank you for the question, and keep them coming. So this is ERICK. Says if you're using a tight stop, let's say 3 points, and it crosses your entry, and then comes back and stops you out, would it be okay to re-enter as it continues through the original entry point, top of the hammer, as long as price doesn't go through the low of the hammer, kind of as a swing trading perspective? So my simple answer to this one is no, it's not okay, because let me draw a picture here for you. Bear with me as I get my drawing tools, which always seem to screw up for you guys when I do it live. All right, so if you have a hammer formation, right, you've got a downtrend going, and you have your little red body or green body, whatever color, and you have a tail. So my rules are it has to open up somewhere below this red line. So I'll just put open, open below. Okay, so that's what the starting piece. So let's say it opens up here, per Eric's comment. It opens right here, and then goes up, just breaches the top of that candle, and then comes right back down and stops me out. For me, this whole thing's done. It's over. Nope, I'm not going to shoot at it again. It's already broken through the high, and it failed. Therefore, The momentum's not there. I'm not interested anymore. Now, it sounded like, Eric, you were saying, well, if it trades down here and it moves up and you go long and it doesn't get through the high, can you still trade it? Yeah, I guess. But remember, my rules are I'm not going to take this trade unless it starts below the high of that hammer and then moves through it. If it does that and keeps going, then I was right. My plan is all good and dandy, and we'll just make sure we manage that trade properly. But if it goes up and then quickly reverses and comes down, then I don't have the conviction or follow through. I have this whole area is dead to me. I would just simply look at it and go, nope, we're done. I had my one losing trade there. Let's move on to something else and make better trades from there. So Eric, with the CK, I hope that helps. But for me, if it breaks the high of that hammer formation and goes in my favor, awesome, love it. If it fails, move on to something else. Even if it doesn't get below this low, right? Still, what's the area I'm interested in is the psychology between what's happening in this hammer formation. If I look at that picture right there, what's happening right now is, it was an aggressive sell-off, boom, real strong to the downside, and for whatever reason, buyers came back in and slammed this thing to the upside. So if that momentum is in fact there, then this thing should not only break, but should just keep on going, right? But if it breaks and then real quickly comes back down, then all my understanding or belief about these buyers building up and now disappearing, well, they're not there anymore. It's eroded. It's gone. Move on to something else. So hope that helps. And the same thing for a shooting star formation. So Eric, if you're here, hopefully that helps. Let me see. What else do I have question-wise? Merlin, what about something like copper futures, the London Metals Exchange? Yeah, I don't trade metals futures. So, well, let me take that back. I trade gold and silver, but I'm predominantly just going trend trading with those. But if you are trading metals, yes, I would say you do want to look at the Globex session, especially any of these things that trade 24 hours. I think there is a value there, particularly when you have a commodity that's main market might not be the U.S. market, right? You look at coffee, or you look at cocoa, right? The U.S. is not the major market for cocoa, so you're looking at other exchanges where the volume might be. We may be the weakest trading time of the day for a specific commodity. So certainly when you go through each one of yours, make sure that you know the specific commodity strengths and weaknesses, and also when's the most active time. What's the best market for it? The easy way to do that is just simply bring up your futures product. Here's a 5-minute of the Russell, all right? So you can see at the bottom the volume times, and that's obviously the most liquid, right? It looks just like our equity market. You got these big volume surges. But if you look at some other markets, they may shift, right? Look at this one. This is this is bonds. Well, let's stick with bonds. Notice how the bond markets have really high volume, but it seems like even in the dead hours, there's actually quite a bit of volume compared to some of the other futures products. What about things like wheat or corn or soybeans? Here's copper. Notice copper has a much more even volume across the bottom, right? It doesn't seem to have as many crazy surges, where if I look at equities like this, well, that actually doesn't include 24-hour trading, so that doesn't count. This is ETFs. Metal markets, right? Much more even throughout the day. So every one of them is going to be slightly different. Let's see lumber. Lumber probably fairly. Ooh, God, that's really ugly. Looks like it's got really short hours. I've never actually traded lumber myself, so it looks like it's got really short hours, which are going to make it a little bit different than other markets. But again, that's part of being a futures trader, is understanding that every one of these commodities has some uniqueness to it. It's nice looking at equities because all stocks trade from 9:30 East Coast time to 4 p.m. East Coast time. Any U.S. stocks, great. But imagine if every stock had different trading hours. That's kind of like the futures market. There is generally a framework of hours, but some commodities trade very different times. Some end early, some start late, some have better volume at different times. Have you seen Paris overtaking London as the biggest stock exchange in the world? No, I did not see that. The Parisians are going to be the biggest market in the world? Well, we time for some foie gras and a cigarette and maybe a baguette, and we have a good day. All right, my impersonations of the French are really, really bad. Let's see, what else I got? Yeah, I look at it too, Dave. Main reason I look at lumber is from the inflation perspective, right? We talked about the potential for inflation dropping several months back. Why? Price of lumber. That's a huge piece of it. It's crazy to think that lumber was trading at almost $1,400, and now it's down at $400. I mean, that obviously is impacting inflation numbers. Now, what percentage is it? Well, remember, lumber's going into houses, et cetera, which means that home builders may start to have much bigger profit margins because the cost of their inputs have dropped significantly. You look at things like corn. I mean, corn, while it's drifting down now, it wasn't a rally for the couple months before that. Soybeans, kind of stagnant. Wheat, still staying near the low. So I think all of this stuff is having an impact on inflation. That's why I do follow them, but not really a trader. I got too many other things to trade. The longer I do this, the more I realize find a few things that work really well for you and stick with it. I mean, I could be trading thousands of different instruments every day, but my attention span would be so diluted. I just go with the ones I think are going to work the best for me, period. Keep it easy. What else? Good question from KF. Yeah, right, exactly, because you know, and I don't know what the lag effect there is, but you know that lumber is going to be an impact on KB, Lennar, Toll Brothers, Pulte Homes, right? It's going to certainly have an impact on them. KF says, how does PPI work with the Fed raising the interest rate hikes and becoming more hawkish? Is it correct to assume the higher it is, the higher hawkish Fed we would possibly have? Yes. So the higher the PPI number comes out, the more likely the Fed's going to raise rates more aggressively, which is why we saw such euphoria on Thursday, right? The markets went absolutely gangbusters on Thursday. Why? Because the expectation is, because the CPI number came out much lower than expected. Look, it was 7.9. I think they're expecting 7.8. It came out at 7.7. So it's not like you had this jaw-dropping decline in inflation. The good news is it is slowing down. Let me show you real quickly a calendar here. I know you staring at my ear canal probably is not doing you guys any justice, but let me get the chart over here. Here's their CPI chart, right? Oh, sorry, so I was wrong. They expected 7.9. The previous was 8.2. So here's your chart. Now, you're asking about hawkishness and dovish of the Fed. If this keeps dropping, the Fed's going to get more dovish, but it needs to keep going, right? We've had 5 consecutive months of declining inflation pressure, which is great, right? That's really good, but are we out of the woods yet, right? Do we think that this is here to stay and all of a sudden we're going to get back down to 2% where the Fed wants it? That's a big if. I personally don't think we're going to get there anytime soon. Do we get to 2% maybe in another year, 2 years maybe? It's going to take a while to get this inflation under control, in my opinion. So that was because this reaction we saw in the markets on Thursday, which let me bring up the equity indexes here so we can check that out. Let's go to the S&P, right? You guys see that huge pop we had on Thursday? Well, that was pretty much due to that CPI. And what happened there is the expectations were that the Fed is going to cut interest rates only 50 basis points versus 75. And that has the markets going, oh, great. The Fed is going to start to slow down the rate increases, which, of course, the more they increase the rates, the more it chokes off the economy. So I think that this is a pretty important one, and it was all because of CPI. Now, tomorrow morning, before markets open, we get the PPI data, and that could be equally as dangerous. And it's kind of risky for me to be taking a short position going into that announcement. Honestly, taking any position directionally into an announcement like PPI tomorrow is risky. You just don't know. It does appear that the PPI numbers are going to come out lower than expected, right? They're most likely going to come out and show that inflation is doing better. And here is the PPI data for tomorrow. You can see the expectations are that we're going to stay exactly the same. Okay. Well, PPI has certainly not had as much of a rally up as CPI did. Consumer prices were soaring, but remember, this is also month over month, right? We don't have for some reason they don't put it here. I was kind of hoping that they would. They have, in CPI, they'll show you year over year, but for some reason, PPI is only month over month. So, it did spike last month, and if PPI increases and is higher than 0.4%, right? If PPI comes out tomorrow and is higher than 0.4%, what do you think is going to happen to the markets tomorrow? So it's 8:30 in the market. 8:30, markets haven't even opened yet. We've got an hour before markets open. PPI rolls out, and let's say it's 0.6. 0.6 for PPI. What do you think is going to happen to the equity markets? Most likely, that Fed funds futures piece I just showed you, what you're going to see is all of a sudden this 80% chance of a 50 basis point raise on the December 14th meeting, that's probably going to drop significantly. And all of a sudden, the expectations may be we're going back to 75. Why? Because the producers are seeing increased costs and therefore they'll have to pass that on to consumers, and therefore inflation is not going up. Now, yeah, if inflation is higher, yeah, the equity markets they're gonna take a dump. And I don't think it's gonna come out higher. I actually think it's gonna come in line with expectation. I do think that we'll come in at 0.4, but I don't think you're gonna get a surprise. I think that even if there is a surprise with PPI number, let's say it comes out at 0.3, which obviously would show even better slowing inflation. If it comes out at 0.3, I think the markets may have a slight rally, but I don't think that it's going to be that as aggressive as we saw on Thursday. The Thursday number on consumer price index caught a lot of people off guard. Right now, the PPI number, I think they're already pricing in a little bit of the PPI number is going to be better than expected. So if it's not, I think you'll see a nice big drop in the markets tomorrow. So there you go. Hopefully I answered that question for you, KF. It's going to come in as expected because the fix is in. Well, unfortunately, fortunately, the midterm elections are over, right? So we got that out of the way. Whichever side won, great. Let's focus on what really matters, which is my trading. That's right, Singy. Smash that like button. I never do enough self grandstanding. Or it's funny, I watch some other YouTube channels, and most of these YouTube channels are they'll record videos and upload them. Like very few do live videos. Most of them are going to be recorded, and they're always shilling themselves and subscribe here, subscribe there. Well, if you're new, hit that subscribe button. Of course, most of you are pretty much regulars. Alan says, investment on PPI wasn't revised since CPI. Why wouldn't it come lower than expected? Well, just because CPI comes out lower than expected doesn't mean that PPI did, right? There's been many times where you have a low CPI number and a high PPI, or vice versa. To me, it's a little bit more telling with the PPI number, because if if producer price index PPI, if that comes out lower than expected, showing lower inflation, then the logical next step is for producers to pass that on to consumers through lower prices. So one of two things will happen. If PPI number comes out much lower, either the businesses themselves are going to make a lot more money because they're still going to charge the same price, or they'll cut their prices to get more sales, more demand, and that will pass on to the consumer, and we'll see the CPI number start to drop. So there is that kind of intertwined relationship between the producer price index and consumer price index. It's all a question of what are the producers going to do. My gut tells me that the producers are not going to cut their cost, right? If I've been selling widgets, let's say 2019, I was selling widgets for $5 a pop. Pandemic hits, and all of a sudden I might jack my price up to $7. Market starts soaring. I get PPP money. I get all these different loans for free, cheap, easy money because we've had a Fed funds rate at 0, and I expand my business. I expand my business of making widgets, but it used to cost me $1 a widget, but because of all these new loans, I buy some new equipment, and now it costs me 50 cents a widget. Am I going to lower my cost at $7? No, I'm going to keep raising it, right? Everyone's paying more, so why shouldn't I just charge more? And ultimately, the businesses tend to do better in those types of environments. Now, depending on what type of business it is, I really don't see businesses cutting their prices. I mean, I mentioned I go to Habit Burger on a regular basis, and it was $8 and change. Now it's like almost $12 for the same thing 2 years ago. I don't see the Habit or In-N-Out Burger or McDonald's or any of these fast food places cutting their costs or cutting their prices. Even if the costs of their goods and services drop, they're still going to say, well, that $11 cheeseburger is still $11. But your costs have fallen by 50%. Still $11 to you, all right? Too much work to change the menu and all that stuff. So I don't know. I just don't see the producers dropping their price. I'm pretty sure if I ran a business and I could now sell the same amount of widgets that I could 3 years ago, but my price has doubled, what incentive do I have to drop my price? Only if I have to be more competitive. Correct. Good point there, boss. If some of my competitors are taking away a lion's share of my business, then yeah, I may have to drop prices to be more competitive. But until I get some incentive to lower prices, I'm not going to. I forgot what CEO was. I think it was of Coach bags or Prada or Fendi bags. Like they were charging like $1,000 for their bag, and then they got it up to $4,000 per bag. And people are like, "Why are you charging so much?" And they go, "Because people are paying it." I mean, as John O'Donnell would say, the only cure for a high price is a higher price. At some point, it'll get to the point that we stop paying him. Exactly, Dave. If you're going to keep paying it, who cares? And it's funny. I have pretty distinct consumption patterns. You talk to my friends, I'm an absolute creature of habit. There are places which I have removed from my pattern of consumption because their prices have gone up too much. And ultimately, they're going to do what they do. And if they lower their prices, I might go back there. But until then, nah. Tom, PPI is on the business side, so they are better at negotiating and creating contracts. Yep, exactly. They may have, that's true, they may have their costs locked in at lower prices. And certainly when you see things like lumber falling 75, 80%, I'm pretty sure that home builders are renegotiating contracts to lock in lumber cheaper. But does that mean that KB Homes or Toll Brothers are going to go, wow, we just cut our lumber costs in half, let's lower the price of our houses? No, they're going, people are paying it. Let's keep selling that McMansion for $500,000 in the middle of nowhere. Price of deals still going up on this East Coast. We'll talk about it. Let me see. I want to make sure. Oh, gosh. What happens to time? You guys, you got to stop getting me talking. I can start talking, I just don't end. Let's run through our markets real quick, just see what happened out there today since I did not get a chance to get to this yet. I'm going to start at the bottom, work our way to the top. Crypto still in a world of hurt, but actually doing better than most of the markets. Crude oil was down 3.47%. Still in my mind, I think I would still say it's hugging this line, but if it gets down below, let's say $84, okay, then I'll delete this blue line. But it was forming this ascending triangle. Today's action kind of ripped it below it. It did close below it, so technically that line needs to be moved. But crude oil down 3.47%, trading at 85.87. And then our indexes, Russell down 1.1%. Felt like on the candle we had on Friday, this was actually rather bearish, even though it was a green candle. Came right up into overhead supply. Thought maybe we'd see a little bit of a down day today. We did get that. I did not trade the Russell today. I did buy puts on the NASDAQ because ultimately, you had this breakout. And I was looking at this area of supply that goes back to September 19th and 20th, and I don't think that that's a great area of supply, honestly. I don't. But I kind of felt like you had this breakout that came through on Friday's session as just kind of a momentum follow-through on data that, in my opinion, wasn't that great. Like the CPI number was okay, but it wasn't like, let's all just wave the flag and say markets are surrendering, here we go, inflation's over. And then today we finished with a Harami pattern. Now, this goes back to the discussion we had on Friday's show, where this is a bearish Harami, although some of you would argue that the tail from today is slightly outside the range. Close enough for government work, I'll take it. So this is one of those patterns that if I see the market open up, let's put a red line right on the low of today, which should be right about there. I could probably better see this on the Qs. But if it gets down, opens up above 11,705 and starts to sell off tomorrow, I'll probably add more to my short position with the expectations are that we will reclaim some of these gains over the past 2 days. Now, of course, this all hinges on the PPI number, which will come out tomorrow. I'll show you that economic data here in just a second. If we get a great PPI number, the markets rip, well, then all bets are off, and I'll close out my put position right away and take a little bit of a loss on that one. S&P, 0.86% slide today. And this one, while it's not perfect, this is a shooting star, right? It should be higher. Like this whole candle today should be at the top of it, but it's good enough for me. And I would trade this the same way as that Harami on the NASDAQ. If we open up a little bit higher and then start to drift down, I think you got a good opportunity for a nice profit-taking move from some of those who gained a lot on Thursday. See if we get that follow through tomorrow. Dow, similar picture here. This got a shooting star as well, which is not quite at the top, but close enough for government work. Down 0.6% on the day to 33,561. Bitcoin still kissing that $16,000 mark with 1605 right now, down 0.28%. And we're not done. There's so much more negative stuff that could potentially come out here with Bitcoin and cryptocurrencies. It is really a wild show. You're witnessing one of the most incredible moments in the history of financial markets right now, in my opinion. What's going on with FTX, Alameda Research, and all the tertiary businesses are tied to FTX. And then here's your gold chart, man. Gold and silver just smoking. And I sold these 1950 calls on SLV against my position, which is great because I had huge profits. But it's like, oh man, did you hate when you do that when you got a lot of something and it just keeps on ripping up right past your the strike price you sold your calls at? So there's the 1950 mark where I sold some calls, and now we're at 2030. Looks like it's going to keep on going higher here. So I'm kind of hoping that silver sells off and closes at 1949 on Friday. But we'll have to wait and see on that one. So those are your major markets. A dollar index showing a little bit of life today, at least not dying like it was the previous two sessions, up 0.46%. And one other thing here I want to look at, which I think is really interesting, when we look at the separation between the inverted yield curve, right? You guys all remember Bill Addis on the program talking about the yield curve, and most of us, including myself, would say, what's the inverted yield curve? It's the 10 and the 2, because that's what the industry tells us. And Bill's like, no, it's the 10 and really the shortest one, but most people would look at the 10 and the 1 in the bond world and be like, wow, okay, news to me. Check this out. If you look at the 10 versus the 2, which is what most people will say is the yield curve, anything below that zero line is reflecting an inverted yield curve, right? So this green line I have up at the top. Right now, it's at negative 0.53, so you can earn literally 0.5% more by buying a 1-year bond versus a 10-year, which it shouldn't be that way. But check out what it looks like when you go to that's the 10 and the 2. Here's the 10 and the 1. You pretty much get another quarter of a point if you buy the 1 year as opposed to the 2. That's crazy. You should not see that big of a separation. So the short end, I think, has expectations because of the Fed is just raising much quicker than the long end of that yield curve. So the 10 and the 2 is inverted by 53 basis points. The 10 and the 1 is inverted by 76 basis points. That is great. And you talk about trends. You guys all know my phrase, the trend is your friend to the bend of the end. Oh, dang it, Alan. Great. Here we go with an hour show. So the question earlier from Alan, which I'll scroll way back up here to find it. He said, before the show's over, I'd like to get your thoughts on Tether, Binance. They have become too big to fail, or are they more vulnerable now than ever? I think that they're more vulnerable now than ever simply because the whole industry is watching them. People are realizing the relationship between Binance and Tether, which is shady at best. The good news here is that Tether does have reserve assets. It's not like UST stablecoin or USDD stablecoin. There are assets there. It's just questionable what are those assets and how liquid are they. They used to have a lot of commercial debt on the side of Tether. Now they're starting to filter off that commercial debt and go more into cash. So it's still a big problem. I think all eyes and scrutiny are going to be on Binance right now, because as I mentioned on Friday's show, I personally think this was an orchestrated attack from Binance against Sam Bankman-Fried and FTX and others to basically say, don't mess with us. And now what it's going to do is usher in a whole slew of regulation next year. But I think the Justice Department's going to have something to say about this. What's going on behind the scenes at FTX. I don't know if you guys saw the news this weekend, but they had something like $500 million in assets still, and it vanished. It simply vanished. They said hackers. The app somehow turned into a hacking app and took everyone's crypto out. And now the rumor is that the kids that started FTX actually wrote that into the code as a failsafe to delete all data and documentation if anything were to happen, which would be one of the greatest movies ever. Good news, I didn't get burned too badly on FTX. I got burned through other parts, but what does Tom say? Tom says, crypto meltdown is reminiscent of dot-com bubble and subprime mortgage meltdown. Yeah, I think it's worse because in the dot-com bubble, yeah, you had some fraudulent companies, but they were generally very small and there was consolidation. In subprime mortgage, the writing was on the wall there that the actions by the collective entities, right, by all the mortgage lenders who were forced to write these bogus loans because of quotas issued by the government, that was foreseeable. This one wasn't necessarily, at least from my perspective, as foreseeable because, number one, you didn't have the regulatory transparency that you do in some of these other entities. Now, granted, they're all going to be lying. I mean, this is so much bigger than something like an Enron or WorldCom, right? Those were big publicly traded companies that imploded. This is far bigger than that, in my opinion. And it happened so much faster. I mean, to see FTX, which will probably go bankrupt. Well, they already filed for bankruptcy, but just want to look at the chart. You guys can see the price chart here. Here's FTT token. It's down another 11.8%. I would highly encourage you to not speculate and try to buy this thing at $1.90, thinking it's going to jump back up to 22. It's probably going to zero at some point. It's just going to become an unwanted token. But there's so many other crazy pieces to this story. I assure you that in the next year, you'll have a Netflix show on this, and I hope they do it right. I hope they do investigative journalism and really find out what's going on behind the scenes because it is crazy. Some of the stories. There's some stories about what was happening at that condo or the house they bought in or renting in the Bahamas, right? You had 10 people living in that building. There's some stories about what was going on in that building that I can't even say on this program because it would not make it past a YouTube profanity filter or it was just too much over the top. It was pretty crazy. Hope it features Tom Brady. Yeah, Tom Brady got hosed on that deal. I think they said Tom Brady and Giselle have a net worth of $650 million, and they put a lot of money into FTX. It may all disappear. All right, let me go into what's happening tomorrow so I can get out of here under an hour and prevent Big Eb from gloating out there. This is all Alan G's fault, though. Anyway, Alan, hope I had some clarity on that one. You do have some really big things happening this week. You have Walmart, Home Depot, Advanced Auto Parts, and BHP Group Limited reporting tomorrow. Retail sales numbers are going to start to come into play. Obviously, this is Tuesday's earnings, but Wednesday, Thursday, Friday, you also have a bunch of retailers reporting, and you also have retail sales coming out on Wednesday. Here is your economic announcements for tomorrow. Of course, all eyes are going to be right here in that U.S. piece. You can see we've got PPI numbers coming out, Empire State Manufacturing Index, which has been negative for a while now. You also have a couple members of the FOMC speaking, and G20 meetings coming, which could shed some light into how they want to deal with Russia, the EU, recessions, and all that type of stuff. And that's pretty much it. The last piece, which we can talk about on tomorrow's show, is going to be happening after the show, which will be in the England and UK. I always forget, Brian, if you're here, is it England? Is it the UK? Is it Britain? What do you want me to call it? I feel like I'm always calling it something wrong because I know they're not as united as they were before, but a British pound. You've got CPI numbers, and it's that Magnum PI day, which I love calling it that. Magnum PI day is where they come out with CPI, PPI, RPI, and MPI data. So they have all these measurements of inflation going on over there in the UK tomorrow. So if you're trading the British pound, that may be important to you as well. And the British pound still looking pretty darn strong after that big sell-off down to about 104. All right, that's going to do it for me for today. Tomorrow, I don't have any guests, so if you have any specific topics you want me to cover, send them on in, TraderMerlin@gmail.com, or put them down below the YouTube video. I appreciate when you guys put your comments down below the YouTube video. I add them to the slides, and hopefully I can get to all those on the show. Tom thinks we're in the 59th minute that we're going to make it just a little bit faster and make it to 60. Sorry, everybody, not going to make it. Hope you enjoyed the show. Hit that like button, hit the subscribe button. I'll see you tomorrow. Take care, everyone.